And in our top business story, the Dubai private sector economy has maintained a strong growth trajectory in August this year, with the latest data signalling an upturn in business activity across all sectors. That's according to the latest figures released by the Emirates MBD Dubai Economy Tracker Index. The seasonally adjusted Emirates MBD Index recorded 55.7 for the month of August, which was down fractionally from 55.9 in July, but above the 50 no-change threshold for the sixth consecutive month. The latest improvement, according to officials, is, however, only slightly less marked than the 16-month peak seen in July. The headline index, which is a composite indicator designed to give an accurate overview of operating conditions in the non-oil private sector economy, is on track for its highest average reading for any quarter since the beginning of last year. According to the tracker, all three key subsectors monitored by the survey experienced improving business conditions in August, although at a slightly slower pace than in the previous month. Wholesale and retail remain the best performing sector, scoring 55.5 on the index, followed by travel and tourism at 54.7 and then construction at 52.6. As a result of the long weekend due to Eid al-Adha, airports across the country are gearing up for a busy travel season, as Dubai International Airport is expecting over 1 million passengers during the holidays. In a press statement, Dubai Airport said that the Eid holiday traffic will top 1 million passengers over the next 4 days. Passengers have been advised to arrive early at the airport with a minimum of 3 hours for check-in and passport control. Emirates Airline also announced that they're expecting around 250,000 passengers to travel during the upcoming period, as travellers head home or abroad for short holidays. According to the airline's latest booking figures, close to 90,000 passengers are expected to travel on Friday, the 9th of September. This year, the top destinations that travellers are heading to are Karachi, Mumbai, London Heathrow, Amman and Beirut. The airline has said that 160,000 passengers will be passing through Emirates Terminal 3 this upcoming weekend, from Thursday to Sunday, with consistently high passenger loads from Dubai also expected on the 11th and 12th. Oil and gas giants are calling for greater industry collaboration and an increased focus on operational efficiency in the lead-up to the Abu Dhabi International Petroleum Exhibition and Conference in November. As global energy leaders prepare to gather in the UAE capital, experts stated that the future of the industry depends on its ability to embrace the new energy landscape and drive efficiency. Patrick Pouyanné, the chairman and CEO of Total, was quoted saying that industry stakeholders must work in unison towards a common goal of achieving a sustainable energy future. He added that technology, innovation and research all play an instrumental role. According to BP's latest Energy Outlook report, fossil fuels will remain the dominant form of energy powering global expansion for the next 2 decades, supplying around 60% of the growth in energy demand and accounting for almost 80% of total energy supplies in 2035. The same report indicates that the fuel mix will witness a significant change, with gas emerging as a major energy resource. Jeff Miller, the president of Halliburton, added that hydrocarbons are by far the most affordable and abundant resource available for advancing the progress of human life and playing an integral part in meeting the world's growing demand for energy. A new report by real estate consultancy firm JLL has revealed that a total of 1,100 new schools will be required in the top 5 cities of the MENA region by 2020. That's in line with the population growth of more real estate projects. The new research was launched during the ongoing Cityscape Global, which revealed that population in cities such as Dubai, Abu Dhabi, Riyadh, Jeddah and Cairo is expected to increase by over 1 million by 2020. According to JLL, the rise in population should create opportunities for alternative investments, particularly the education sector, as around 350 private schools may be required across the 5 cities. Commenting on the report, Craig Plum, the head of research for JLL MENA, stated that the demand will be driven by the growth of expats and the desire for high-quality education as they seek to invest in the growing number of projects. The report revealed that Dubai has one of the fastest growth populations at a compound annual growth rate of 3.5% per annum, which means the emirate requires 53 additional schools by the year 2020. Meanwhile, Abu Dhabi is estimated to require 44 additional schools, in line with the population's compound annual growth rate of 2.9% per annum.
For a developer to have a school in their project is definitely a sales point. You look at projects like Arabian Ranches, like Festival City, they've benefited a large amount by having a school as part of those projects. So the developers are recognising this as well and are making sites available in the mixed-use projects for schools because it adds value to the rest of the project. A lot of the international investors have shied away from Dubai so far because they can't get long-term income-producing assets. But that's exactly what schools are. You could get a 15-year or a 20-year lease to a secure operator. So that's the sort of investments that international investors are looking for. So we think this will be an attractive investment both for local and for international investors. Actually, 2016 so far has been relatively flat, so we haven't seen much recovery, and if anything, residential prices have actually declined slightly, about 10% over the year. We think we're very close to the bottom of the market now, so we're expecting a recovery in 2017, leading on into 2018, 2019, and a large part of that is the expo factor.